Good morning, viewers. It's Tuesday morning, March 11, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. US stocks plunged on Monday as relentless tariff wrangling and mounting anxieties from a possible federal government shutdown gave rise to fears that the US economy could be careening into recession. Stocks crashed on Monday as concerns about the US economy tipping into a recession grew. A barrage of new policies has increased uncertainty for businesses, consumers, and investors, notably back and forth tariff moves against major trading partners like Canada, Mexico, and China. Tariffs have spooked investors with fears of an economic downturn driving a stock market sell-off that has wiped out over $4 trillion from the S&P 500's last month when Wall Street was cheering much of the same agenda. The previous week's steep sell-off resumed, gathering momentum as the session progressed, the all three major US indexes suffering sharp declines. The stock market sell-off deepened on Monday. The benchmark S&P 500 fell 2.7%, its biggest one-day drop since December 18, 2024. The tech-loaded Nasdaq Composite slid 4%, its largest one-day decline since September 2022. The Dow gave up nearly 900 points, the S&P 500 fell 2.7, and the Nasdaq Composite tumbled 4% as shares of big tech companies extended their sell-off. The S&P 500 on Monday closed down 8.6% from its February 19 record high, shedding over $4 trillion in market value since then and nearing a 10% decline that would represent a correction for the index. The tech-heavy Nasdaq ended Thursday down more than 10% from its December high. The S&P 500 tallied back-to-back gains of over 20% in 2023 and 2024, led by mega-cap technology and tech-related stocks such as Nvidia and Tesla that have struggled so far in 2025, dragging major indexes down with them. Those tech and mega-cap stocks that had propelled the market higher the past 2 years were hit hard on Monday. The S&P 500's technology sector dropped 4.3%. Shares of the other Magnificent Seven stocks, Apple, Microsoft, Alphabet, Amazon.com, Nvidia, and Meta platforms, fell between 2 and 5%. Tesla plunged 15.4%, the stock's largest single-day drop since September 2020, as the electric car maker's luster dimmed in the wake of billionaire CEO Elon Musk's Department of Government efficiency firings and protests arising from his support of far-right political parties in Europe. President Trump over the weekend refused to rule out the US entering a recession this year, telling a news channel there will be a period of transition because we are doing is very big. In contrast, Commerce Secretary Howard Lutnick told NBC News there's going to be no recession in America. Some investors say that the Trump administration's seemingly blasé attitude toward potentially setting off a downturn is rattling market watchers who had believed that Trump's pro growth stance would boost the economy and the markets. But this is the first time an administration pretty much says it with a straight face. Every time there has been a structural change, there is uncertainty and friction. It's understandable. Investors are starting to be a little concerned and are taking profits. While stock valuations have moderated with the recent sell-off, the market broadly is still significantly above historic average. The S&P 500 as of Friday was at just about 21 times earnings estimate for the next year compared to its long-term average forward PE of 15.8. Other risk assets were also punished with Bitcoin dropping 5%. Coinbase and MicroStrategy tracking Bitcoin weaknesses dropped 17.6% and 16.7% respectively. Bitcoin fell 5% to below $80,000 to $78,902. In another sign of growing investor unease, the CBOE Volatility Index on Monday reached its highest closing level since August. Some defensive areas of the market held the better, with utility sector logging a 1% daily gain. Safe haven US government debt saw more demand, with benchmark 10-year Treasury yields which moved inversely to prices down to about 4.22%. The dollar index hovered near its lowest level since early November. Last week, it suffered its largest decline in over 2 years, battered by economic and foreign policy shakeups. In commodities, West Texas Intermediate crude fell 1.6% to $65.97 a barrel, and spot gold fell 0.8% to $2,884 an ounce. Coming later this week, inflation gauges for February, plus readings on consumer sentiment and job openings. In summary, this is a headline driven market, one that could change in an hour. So sit tight, buckle up. We finally have the correction we were waiting for, and long term investors will be rewarded again. That's it for today, my dear viewers. And if you're enjoying our content, please do subscribe, like, and share this video as much as possible. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.